Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets from an intermarket analysis perspective, as always. Okay, this is a video being brought to you as courtesy of www.cfds.com, a leading CFD brokerage. Be sure to explore the services and products that are on offer at www.cfds.com. Alternatively, you can visit the educational site, which is www.cfds.education, to learn more. Okay, now in terms of European markets this morning, they certainly have come under immense pressure due to the fact that China certainly was down almost 7% overnight. The Nikkei was down 2.5%. The Hang Seng down 2.5%. So an en masse, should we say, a rout or en masse risk aversion trade overnight. The fact that Mr. Draghi certainly failed to stimulate or pander to the doves, and given the fact that the BOJ still remain indecisive, and potential liquidity concerns again in China, and we have a risk aversion trade in full swing. Okay. Also, given the fact that oil prices certainly came under immense pressure as well. Brent retested the $28 region, currently at 28.2, did fall into the $28 category as well. So certainly a risk aversion trade in full swing. Okay, now we currently have Mr. Carney talking at present. Comments coming out from him. Carney not ready just yet to decide on extending time at BOE. So certainly headlines coming out from Mr. Carney. Whether or not he'll be able to neutralise the sell-off is certainly a different debate altogether. But for now, let's see exactly what let's try and assess the damage that's been done on European indices. Let me just bring up a chart of the Shanghai first of all. Daily chart obviously breached support and certainly remains bearish. That is not good news, folks. Okay, if you are a trader in European markets, that certainly is a concern. The weekly chart obviously has broken below that key support zone. The next level now is the 200 MA, and that obviously indicates the total risk aversion trade in full swing. Okay, if that 200 MA were to break, then you are looking at previous resistance equals support. So again, a cause for concern. In terms of the Nikkei itself still remains weak as well. At present, the Nikkei 16,750. So still holding the inside bar though, and we shall see whether or not it can sustain itself. Now, bringing yourself onto the weekly chart is where you are going to really appreciate the support level of the key bottoming tail on the Nikkei, given the fact that we had a pivot low at 16,000. So certainly some sort of consolidation there, and obviously that's prior to the BOJ, whether or not they will obviously look to potentially increase the stimulus or not. Okay, now the comments recently have been very hawkish in nature, certainly whether or not they want to do that intentionally to surprise the markets. Now that's a totally different question altogether. That's something that we'll certainly look into. Okay, now let's just observe the rest of the actual indices. Okay, now bringing up the economic news flow this morning has been virtually non-existent. Basically, it's the focus remains on China. Although Mr. Draghi's comments yesterday, it sounded like he was arguing with the hawks, and obviously, given the fact that there is uncertainty regarding the additional QE, even though he has stated it, and it certainly triggered a short squeeze, market participants fail to be convinced. Now, that clearly shows in the chart of the Euro USD. As you can see, the Euro USD has failed to break the pivot low at 1.0790. So again, that's not exactly a bullish scenario, okay, for equities. Obviously, not very scenario for Euro USD. Also, the chart of the bund. Bring up the chart of the Eurobond, you can clearly see here on the weekly chart, Eurobond has failed to take out the highs. Okay, so again, a cause for concern. We did have a HNS formation that obviously failed to play out. Now all eyes are actually on the actual daily chart here. Okay, and the daily chart obviously is holding that resistance level at 162. If the daily chart holds that resistance level and moves lower, then we all know what will happen to Euro. Now, given the fact that the Shanghai is down on -6% overnight, that obviously has triggered off the risk aversion trade, and that in itself should send the Euro USD higher and send the bonds lower. Okay, given the fact that obviously the euro has become a safe haven currency, i.e. anti-QE. Again, that's some food for thought. Okay, now let's go back to equities now. Let's see exactly where they stand. Let's go to the daily charts first of all. Now, the Euro Stocks itself, daily chart, obviously we have this falling, contracting wedge pattern and a potential breakout north. So certainly a bullish scenario still remains. But having said that, folks, remember, with the Shanghai being down 7%, almost 7% overnight, that doesn't bode well for equity, so bear that in mind as well. Any IHS formation with a 7% drop on the Euro Stocks, it's going to be very hard for it to play out. It's going to be very, very hard for it to play out. Now, look, provided we hold this neckline and hold that pivot low that we made in the morning at 2944, then the bulls certainly have a chance. Okay, so bear that in mind. So bulls certainly have a strong chance if we can hold that pivot low this morning. Okay. And that's what I am expecting. I do expect overall, given the fact that even though Mr. Draghi is fighting the hawks and trying to make his argument stronger, ultimately, given the sell-off that we were witnessing in China and obviously the US globally, slowdown in growth, lack of inflation, etc., they'll have no other choice but to enact QE. So certainly take that into consideration. Okay, so but having said that, the inverted head and shoulders formation still remains unless we take out the fib 75%. That's when this obviously, or even the neckline at 2920. So ideally 61%, provided we hold that, the IHS is still has a green light to potentially play out. So again, that's something that we keep a focus on. Okay, now in terms of the actual alternative indices as well, let's just bring up a chart of the German DAX. The German DAX, obviously, you can see on the daily chart you're holding gap fill support, and that support zone has held thus far. So 60-minute chart, you can see we're into gap fill support, and we are looking to potentially thrust higher. Having said that, given the fact that Shanghai is down 67% overnight, you are looking at some type of consolidation here as we come into previous support equals resistance and a potential move lower. Okay, a retest of that support at 9580 is not out of the equation. It's certainly in the equation according to my understanding and interpretation. Okay, right. The actual stock of the French CAC now, let's just bring up the equities. Okay, of French CAC, certainly a bounce as we can see here. We didn't test the 200, the gap fill support, so again that gap certainly needs to be filled below. It's very hard for the gap above to close, given the fact that the Shanghai obviously was down 6 or 7%, and therefore you are looking at potentially retesting lows and closing the gap below. So bear that in mind of the French CAC. The FTSE 100 inverted head and shoulders certainly looks more likely now on the 60-minute chart, but it's early days yet, and we need to see more evidence on a potential bullish catalyst. For now, you're consolidating. It's a bearish consolidation. It's a bear flag. Okay, and therefore you are looking to potentially make lower lows and lower highs. The daily chart of the FTSE 100, you can clearly see that you have pulled back and held up resistance at 5915, and therefore you are looking at potential support here. But given the fact that oil has been weak, the focus will solely remain on oil and how oil reacts. Okay, so bear that in mind. So all eyes on oil and the next potential move in oil. Okay, now Brent itself, let's just bring up a chart of Brent. Okay, so Brent crude at the moment, you are looking at a 60-minute chart here. Obviously it's pulled back, potential of previous support equals resistance in this zone here, and obviously horizontal support here. If that fails to hold, the 29.3 region held, looking at a potential short squeeze or a small bounce here before the market starts to retrace in the opposite direction. So just bear that in mind. The chart of Brent has support at 27, potential support at 28. We have potential support at 29.5, and they are the zones that we are going to watch and observe. Okay, now the Aussie itself is into resistance, so again that certainly is a bearish factor, and that's something certainly to consider when trading. Now the Kiwi also as well, the Kiwi certainly is coming under pressure. and certainly has remained weak overnight. Now, the actual fact that the Shanghai was exceptionally weak, that's certainly something that's going to be of major concern. Okay, the Shanghai being weak overnight, that's something that's going to be very hard to shake off, and in terms of the next move in this market. Okay, now bear this in mind, you have an inverted head and shoulders formation on the chart of oil. If you can hold this right shoulder here, then it certainly remains bullish for the FTSE 100, and it will be very interesting to see how the FTSE reacts, especially given the fact that we have the Carney speech as well. The dollar index itself on the 60-minute chart, you can clearly see the H&S formation, which obviously matches a FTSE IHS formation, and again, that's certainly some food for thought and a very, very interesting scenario. Okay, so take that into consideration too. Okay, I think that's a market wrap for European indices for now. Any pop itself on the FTSE, or given the fact that we can see this bounce here, will certainly be short-lived, given the fact that the Shanghai certainly was down quite substantially overnight. Asia market certainly weak. It will take a very, very important catalyst to reverse those fortunes. For now, bias is bearish, and we are looking at potentially holding those double support lows at 5770 on the FTSE, the German DAX at 9575 on the gap fill support. They are the zones that we are going to observe. For now, you're into previous support equals resistance, and therefore it's bearish. Okay, I think that's a market wrap. Be sure to visit cfds.com for your trading needs, and certainly you take on advantage of that potential bonus offer. Goodbye now.